Yo, good morning, traders. Welcome back to another episode of Market in the Morning, your favorite futures Forex show out there. We're going to go over some market levels. We're going to cover gold, the S&P 500, and we also had non-farm payroll today. But before we even get started with any of that, we have a special guest, one of the co-founders of Market AI, Jeev, and we're going to go over some key levels. We'll do some technical analysis. Guys, drop a like, drop a hello, drop a W in the chat if you're ready to make some money with market today, because Market in the Morning starts right now. All right, Jeev, man, good morning, bro. Thank you for being with us today. Happy Thursday.
How's it going, Kevin? Thank you for having me here, man. Always a pleasure.
Absolutely, dude. Good to have you, and especially on a day like today where we have non-farm payroll coming out.
Yeah, so fortunately for us as traders, we did get some of the data released. Now, there was some adjustments where the October information is not released yet, but we did get the September results. Now, so far, what we're seeing, looking at the dashboard and looking at the economic calendar, is the data is a little bit mixed. Unemployment rate did tick up by 0.1 from 4.3 to 4.4%, but non-farm payrolls started to blow the forecast out of the water, right? Non-farm payrolls came out at 120K almost, 119 exactly. So it's going to be a little bit interesting how markets digest it. In my opinion, it does look like they're going to add a little bit of greed to rate cut bets for December, especially with how harsh December rate cuts have been falling. You want to comment on that? What we've seen over the last month on the rate cut bets?
Yep. Yeah, no, that's very important. Very important too to point out, NFP, all this news coming out today, this is going to have that impact on that Fed rate decision for December. And we all know at this point, that's what really will move and make that impact in the market. We saw they announced, hey, 50% rate cut for December. It went from 90 to 70 to 60, back to 70 for a moment.
Yeah.
Now it dropped down to 50. That 50% is really what drove the ES from those all-time highs of S&P to about a 4 to 5% decline.
Yeah.
But with some good results, good reports, possibly could increase the chance of a rate cut. I am curious to see the Fed rate site to see if it has made an impact from those reports.
Yeah, even if you go check out the news feed right here, it does look like US short-term interest rate futures have risen a little bit after the September jobs report, which is mainly probably attributed to the unemployment rate ticking up. So it's going to be very interesting. We have a little bit of a tug of war here. The economic data short-term is showing us that the Fed still may cut rates in December. But even with FOMC meeting minutes yesterday, it looks like the majority of Federal Reserve members, the Fed officials, and including Papa Powell himself, Jerome Powell himself, they were still saying they don't want to do any more rate cuts for the rest of this year, right? So it looks like we're going to have a little bit of tug of war between the greedy crackheads with capital, aka the stock market whales, versus the majority of positioning we've seen so far, right? And it's a little bit of mixed data today, which is going to be messy for us as intraday traders. For example, we still got jobless claims reported, which is dropping. Non-farm payrolls picking up. Average earnings is dropping, which is taken away from some of the employment sector inflation. But of course, unemployment rate ticked up as well. But one important thing I want to talk about is at the end of last year, when we were looking at the summary of economic projections from the Federal Reserve, they were already expecting that unemployment rate can rise to 4.5% by the end of 2025. So we're really within those expectations the Fed has set for us ahead of time. We're not really seeing, in my opinion, any recessionary risks in the US just yet, like a lot of the mainstream media has been pushing and terrorizing based on, right? So today, with US short-term interest rates rising, after the release of the September jobs report, I'm gonna click that as a nice little fire headline there as well. Looking at this one here, it does look like we may see a little bit of a dead cat bounce, a little bit of relief on stocks. But as we approach some of the key levels that you may be identifying on SPX, ES as well, we still might not see those long-term buys on stocks until we get closer to the Christmas rally time, the historical seasonal rally time. But that's just my view so far. Looks like gold is doing a classic NFP whipsaw. Pardon my language, but we've always called this a double-ended dildo candle, where you get a very small candle body, you wick aggressively on both sides of the coin, traders get swept out. Traders get their sell stops activated, their buy limits activated, and it just gets swept in the middle. But unfortunately for us, the data is pretty mixed. So it doesn't look like we're going to see huge one-sided volatility, but with interest rate cuts, bets starting to rise a little bit for this September period, I wouldn't mind seeing a little bit of upside on gold, even going back into like when I'm looking at the structure here. Let me pull this up.
Yeah, I know what I'm going to be doing while you pull that up. During my session today while I'm trading, I'll be trading the ES, some gold as well, but I'm definitely going to be keeping an eye on the live news tab on market because I want to make sure if a big headline comes out, especially because we had this data this morning, all it takes is one big headline to say Powell now sees a higher chance of a rate cut in December to completely skyrocket the market. I'm talking gold markets, S&P markets. So be aware of that today, guys.
That is for sure something to be aware of. And it's something I'm going to be looking out for as well. But I think from just in my personal opinion, I think Powell is pretty set on the tone he set from the last FOMC, where even though the data hasn't been getting released to the public, the Fed officials know the data. You know what I mean? Wasn't it like, for example, I want to talk about something pretty interesting. You know, last week at the towards the end of the week when CPI was supposed to be released, but it wasn't. But Fed rate cut bets still dropped from 70% to 50%.
Yeah.
So that CPI data, it's still being collected. It's still being reported internally from a government standpoint. It just wasn't released to the public. You know these insiders with the corruption and power that takes place in the markets. They probably got a whiff that the CPI report was still sticky and troublesome, a little bit elevated back at baseline levels. And then all of a sudden, market's probability for December rate cut dropped 20%. Usually you only see these strong changes in interest rate probabilities after a significant data report or after FOMC or something. But when I'm looking at gold here, with rate cut bets slightly increasing and jobs data being a bit mixed, if we don't break back below 4,060 here, it does look like even with some liquidity grabs through the new 4-hour candles on most brokers, the New York Stock Exchange open, it does look like gold could at least creep up into 4150s again, even into 4180s before we might see a stronger sell-off. So it does look like with rate cut bets increasing, dollar may be short-term bearish, stock markets may be short-term bullish. We see a little bit of relief, dead cat bounces on these asset classes before we start to continue some of the moves like this. So this is something I'm going to be keeping an eye out on. And you want to share your screen and talk about SPX a little bit?
For sure. Let me get that going. Let me just stop sharing yours. And guys, we are set.
No problem.
Real quick, ES, S&P 500. A lot of you guys I know trade gold. S&P is another major index that people trade. NASDAQ too, so it's up to you guys if you want to do NASDAQ over S&P. But S&P is really the market in a whole. When we talk about the stock market, a lot of people are just referring to the S&P 500. So are stocks strong? Are they weak? As we just mentioned before, with some of the data coming out. So we see the E-mini S&P 500 rallied on November 20th as tech stocks led gains following Nvidia's strong earnings. I'm sure many of you, if all you have to do is go on Instagram, and you'll see a post about Nvidia. They had a double beat yesterday. This was their 12th double beat in a row, and people still want to question an AI bubble.
Yeah,
I mean, they're up revenue-wise 62% year over year on Nvidia. That is mind blowing.
I think it was their market cap or something is now 2 Canadas. Did you hear? Did you hear that one?
I think I did. Yeah, I saw
it's 2 Canadas now.
Crazy, man. Absolutely mind blowing. The impact that just one company can make. Right? It holds. The last report I saw, Nvidia held 8% of the S&P 500.
Which is nuts.
Which is insane. One company, but at this point, it's growing more and more. I could see it possibly being 9%.
Yeah. Well, to add on to what you're saying, with the fact of having a little bit of a rebound in tech sector, with Nvidia's earnings being very optimistic, it takes away from those AI bubble pop concerns, and it takes away from some of those AI valuation concerns. On top of today of having unemployment rate rise by 0.1, it does look like we're going to see a little bit of greed and a little bit more optimism in stock markets and risky assets. And in the example of S&P 500, even when you're looking at your market levels there, it can for sure be digging higher, especially after the New York Stock Exchange open. For me, if SPX on the intraday is holding above roughly 6,700, 7,500, we're talking. But if we're holding above 6,700, it looks like we could go right back up to like 6780s, even back into the 6800s before we might see any level of bearish reaction or something like that. The momentum there of holding above 6710s and going up to 6780s, I'm pretty in line with the market bias and what's that showing us, fueled by Nvidia earnings and rate cut bets starting to increase just a little bit.
Yeah, no, I love that, man. That's perfect. That's right with our market level. Market level 6780.
Yeah.
6780 to the upside. Bullish target, so it's not even a pullback level. This is strictly off of that intraday being slightly bullish. Higher time frame did switch over to slightly bearish for the first time in a little while. We do want to
Which I think makes sense. Like we could still bounce on the higher time frame to that pullback level and still may see some profit taking and uncertainty into the end of the year, right? Before we get into that Christmas rally.
Absolutely. All it takes is one report, man. All it takes is a little bit of optimism to be yanked right out and say, hey, listen, you know what? Yeah, Nvidia reported well, but we're going to stop partnering for a little while. You know, all it takes is a minor slowdown, because if optimism is what fuels the market, one little hiccup is going to completely pull it back.
Yeah, if especially understanding the context. If all the focus is on more AI hype and AI growth or more rate cut bets, and like you said, you have one headline comes out where Powell's like, I know unemployment rate went up, but I still don't really want to cut rates. Market flips on a dime just like that, right? But one thing to understand for our audience is with the core design of risky assets, asset classes like SPX and Bitcoin, in the long run, in the long term, it's always just much easier if you understand market psychology and human psychology for these asset classes to be bullish rather than bearish.
Yep.
Bearish plays are always short-term corrections, short-term price repositioning. So the whales can get better prices for themselves. So the whales can exit liquidity from higher prices, then buy in from the lows, right?
Yep, exactly. Guys, retail traders, we don't even make up 5% of total volume in the market. So
really?
it makes, yeah, dude.
I thought crazy. ICT traders were the ones pushing the button.
They're market makers. I
thought they were the market makers,
yeah,
right?
Yeah,
that's completely different.
Bro, crazy. But back to what you were saying about ES, and yeah, it is definitely switching to a possible slightly bearish tone on a higher time frame. We see up until this was October 29th. This is when Powell spoke and when the interest rates for December really started to plummet. Yeah, so we had higher highs. We were bullish, optimism. Powell came out. That was a pivotal moment in the economy. That was a catalyst. Catalysts can give us those reversals. We started moving lower. We created a lower high. Now we see that we are trying to form a bear trend, right? We're making some lower highs. Now we want to see at this point on the S&P 500, it's sort of like, it's a joke I have in my community, is that we're either going up or we're going down. But
the way I'm seeing it right now is like, do you mind if I share my screen for a
second? Yeah, go for it.
We switch back to it.
Let me get you back on there.
Okay. So I think with what we're seeing in market on S&P 500, it makes a lot of sense right now. On the intraday, we're still bullish. We have the Nvidia earnings, technical momentum, and of course with the recent jobs data. But on the higher time frame, we could easily reach this pullback level before seeing a retracement. I think when we're looking at SPX, we are in a controlled higher time frame bearish correction phase. But whenever you have a controlled correction phase on stock markets, it's not triggered by something surprising or shocking, like when you had the lockdowns or you have some type of financial crisis. You always see very aggressive dead cat bounces and potential false bottoms, which can pull in a lot of buy liquidity, trap some buyers before the major market makers and whales start to profit take. So for me, when I'm looking at SPX here, I wouldn't be surprised when we're looking at the current structure with the intraday sentiment. If we hold above 6,700s, we could easily still see some great buys for a lot of us intraday traders, scalpers, but this may be the extent of the range we play. I think from around 6,700 to mid 6,800s may be the peak. I would be very cautious as we get back to those record high prices or to some of these key supply zones. As you're highlighting on your chart, we are seeing a little bit of bearish market structure starting to form, which makes sense with some controlled profit taking from record breaking highs as rate cut bets have dwindled a little bit. And we know that markets are always forward looking. They're always looking 1 to 2 steps ahead on what's coming next, right? Hence, this is where the pricing in concept derives from. So, in my opinion, over the last year, a lot of the rate cut expectations have been well priced in, right? Ever since we got the trade war fears and the trade war fears priced in, and we started to get the trade war pause, it's only been up since then, right?
Yeah.
Very, very minimal corrections. So, in my opinion, what I'm really looking to see take place is some higher time frame structure forming, where we could easily see some corrections on the stock market short term and some potential structure starting to form like this, even going into the holiday Christmas rally. Potential of something like this forming, retesting these previous significant highs, getting a little bit of repositioning for the institutions, more favorable prices being accumulated before we see a holiday Christmas rally and something of that nature. But for a lot of the people in the chat that are just focused on right now in this minute, it does look like we may see a little bit of a relief bounce on SPX, on the stock market indexes, even Bitcoin, which we can take advantage of before the next bearish leg and sell off, right? So what do you think about that?
100% right, guys. We have that great way of putting it too. The short-term relief we have right now, supported by that short-term optimism of Nvidia's earnings, of that AI bubble worry sort of coming down. These aren't long-term effects. These aren't things that are going to make the market completely go back to all-time highs, but it's something that's strong enough to give us that relief.
Exactly. And if you've been following along the general market sentiment over the last couple of days, we were more in defensive positioning or a neutral outlook. Now with the Nvidia earnings boost and going into this jobs report, we are seeing some cautious optimism. So it does look like we may see a little bit of that relief rally, a little bit of a short-term bounce on Bitcoin, SPX, Dow Jones, and even gold can retest some of these better bearish positions before we jump back into that rate cut deterioration play, right?
Yep, absolutely, guys. I'm looking for that relief today. Jeev, what are you thinking? Some bull movements this morning?
Yeah, so for me, ideally, timing wise, obviously for us as intraday traders, scalpers, day traders, timing is very important, especially on these volatile, risky assets. So I think, especially when we're looking at SPX as an example here, even with the New York Stock Exchange open, I'm really liking this short term technical support that was roughly holding above this range. We started to break above this wick here. And of course, where the current high has just been printed, it does look like with the fundamental factors we're stating and the sentiment after a liquidity grab through the New York Stock Exchange open, whether we retest into around 6,700 flat or start to break above 6,750s, we have some pretty clear-cut traffic to be digging up to these price points of interest to the left, right? Which can be some fantastic plays with some pretty solid risk versus reward and playing the relief bounce like we're talking about.
Exactly. And those, it's funny what you see, those lower highs that you were just marking out, sort of those areas that people are going to be stopping out. I like to call those sort of like low hanging fruit, right? We know that these lower highs, if they're all stacked up really close together, people that were short from those areas, they have their stop losses there.
They're going to get swept out. They're going to get swept out.
And then continue.
The liquidity gets accumulated. Market makers say, all right, we got better prices now. And then they'll continue this squeeze. So today, for sure, for today specifically, maybe even into the end of the week, as we know how strong the greed can be, I think SPX can be retesting into some of these higher prices before we see a sell-off.
Yeah, I'd like to see SPX-wise at least, what do you have, 67, about 6,800.
Yeah, 6,800 I think is a very fair, very, very realistic expectations that we can dig into. And then on something like gold, I can see us easily at least coming for a little bit of a reactionary double top back into like the 4140s to 4150s. Just with, if we see intermarket correlation confirms that maybe dollars a little bit softer through the prime portion of New York session, rate cut bets are holding a little bit more weight. Gold, if it doesn't break back below 4,060s, may see some movement like this before we see a bearish downside play, right?
Yep.
So that's what I'm going to be keeping an eye out personally. But I am going to wait for these setups after the New York Stock Exchange open, just to avoid those stops getting swept and poor positioning and poor timing. One of the things I always talk about is that being involved in the markets for many years, my patience for people has gone down, but my patience for price has exponentially increased. I've learned to grow the skill set of being very patient for price and waiting for your areas of interest, your key points of interest before executing. Because majority of times when you don't wait for it, it ends up burning you, and you usually end up going to the prices you originally expected anyways.
Yeah, no, seriously. It literally, it'll burn you, stop you out, go to your original entry, and then go right to your take profit.
Yeah, but I absolutely love the market news terminal, especially with some of these filters we get. It's pretty interesting. 10 minutes after the data releases, now we're getting some of these Fed officials still saying, well, hold on, wait a second. Cutting rates could distort market pricing levels, right?
Right.
So we are getting a little bit of mixed market conditions that could keep it choppy from now into the New York Stock Exchange open. But I think once the noise and dust settles, we will still see that primary market greed can hold a little bit of weight here. We can see, especially later in the session, some of these negative risky asset sectors start to turn more positive. Cautious optimism, maybe even adjust to some short-term active buying. And this may be the narrative with Nvidia's earnings boost and some Fed and some weaker US jobs data with unemployment rate ticking up, boosting short-term rate cut expectations. This may be the narrative that just holds weight for the rest of the week now. And then next week, we might see a little bit of a reset where we need to reassess accordingly.
Yep, absolutely. Oh, we got a question in the chat. What is going on, Taco Man? Is the data bad for NQ? Do you mind pulling up do you have NQ on your market watch list?
No, I don't. Do you have it? You could check it out
do.
if you have it. Yeah,
Sure.
switch off to you.
Here we go. Perfect. All right. So NASDAQ, NQ had more bullish optimism, and the data really is more supporting of NQ, especially because now we have the data coming out plus the optimism of Nvidia. So we have a lot sort of piling into tech that could really help support it. At this point, we had an area of resistance right here that held overnight, and it was an area of resistance on a previous day last Monday as well. Now we're blowing right through that. So something I would personally like to see on NASDAQ is if it can hold above this old area of resistance, hold it as support, and look to see if NQ could start to have that relief bounce too, right? So when we have a relief bounce, think of it almost like a short squeeze. So many people are looking at the charts and going, I got to short it, I got to short it, I got to short it. And then markets just squeeze on them. Or they've been in sell positions, markets start flying against them, forces them out of a sell position, which forces them to buy back.
Yeah.
When that happens, it adds fuel to the rally. That's what gives us this quick move. So short term, definitely looking for some buys on NQ and mainly because of Nvidia, but on NQ and ES. If we take a look at our what's impacting NQ intraday, Nvidia earnings momentum, of course, is leading with 40% being bullish. Nvidia's robust earnings and positive outlook, very important, the outlook, have reinforced tech sector sentiment, driving renewed buying in heavyweight NASDAQ names and calming concerns about AI bubble. So a bit of a short term, could be stretched out maybe a few days. I don't see this being enough to rally us back to all-time highs.
Like you said, the stock market buyers will get a little bit of a positive day, a little bit of a relief day, as we've seen this bearish correction starting to take place on the higher time frame. And like you said, you get those dead cat bounces, right?
Yep. And when we get these moves, we see the momentum behind them, right? If we see here on the 5-minute, we're flying to the upside. Well, I don't want to try to just go short for no reason. We want to find that momentum. As day traders, we're trading that intraday momentum. We're not trading the higher time frame. Even though that helps give us direction, we want to know intraday where we're moving.
Yeah, it's always very important for traders to adjust their outlook based on the time perspective that they're actually involved in the markets, right? I see too many people who may be scalping the markets and their idea is to be in a trade for 15 minutes, but they're saying, oh, I'm looking at a weekly level here. right? It's like you're completely contradicting the trade style you're looking to execute in, right? But what you said on NQ makes perfect sense. Even with like a short-term New York Stock Exchange open liquidity grab, if we could create like a reactionary double bottom around that support level,
Yep.
and then have that lower wick being created that we see technically before the buys continue up, I think would be a perfect play. Seeing some relief with the market optimism today looks very nice in my opinion.
Yeah, absolutely. We are surpassed the market level, but we did have news, and whenever we do have news, we can get those a bit of a more extreme move following.
Yeah.
Let's see. So that's NASDAQ.
And that should refresh with some fresh levels for the users to trade with going into the New York Stock Exchange open as well, right? So that's going to
Awesome.
be very nice.
Awesome. Guys, if you haven't hit the like button, which I know you haven't, make sure you run it up. We want to hit 100 likes on today's show. Absolutely great stuff. This is show number 2 of Market in the Morning with Jeev. He's going to be on with us every Thursday, and every Tuesday we're going to have Nawab. So great stuff here on Market, guys. Make sure you like, make sure you hit subscribe. Enjoy.
Yeah, our market vision has always been about sharing as much value as possible for traders just like us to take advantage and understand what's going on, right? Not just seeing lines on a chart or seeing red and green candles, but understanding behind the scenes what's really driving price. And it's like before fundamentals, you're trying to navigate in a cave and it's completely pitch black. Yeah, you might find your way around by touching the walls and eventually going left and right and up and down. But fundamentals is your flashlight, right? Fundamentals is your flashlight to see, okay, this is a dead end. Okay, let me go this way instead, right? And you can navigate with a lot more confidence and understand what's actually driving price.
Yeah, absolutely. Here we go. Oh, guys, we just got another high impact news 12 minutes ago. Fed Hammock says cutting rates now could distort market pricing levels. So still leaning on that hawkish tone.
That's what I was talking about. So what I was saying is like it was already expected. The Feds already were expecting by the end of this year, unemployment rate could go up to 4.5%. So when we're at 4.4%, we're still within their expectations. It's not a shock or surprise to them, right? We're not really showing any recessionary risks in the US. And when you're looking at global markets, you always want to compare these countries to other countries. And in my opinion, even though US growth has slowed down, even though economic activity has maybe dwindled a little bit, which is understandable amidst tighter financial conditions and higher average interest rates, the US economy is still far more resilient than a lot of its global counterparts. It's still on top, right? Compared to UK, Canada, countries in Europe, right? So that's one thing I've always been taking and looking out for. And we can see that highlighted where a lot of countries have been rushing to cut rates, like the ECB or the Bank of Canada, because they know that their countries are very fragile. Their countries are very weak and need that monetary policy support, right? So you have these interest rate differentials that still get created between like Canada and the US or the US and the Eurozone, which is something we can take advantage of, as the Feds have been not really in any type of rush to cut rates, highlighting that they're still confident in the US economy, in the resilience of the US economy, right?
Yep, absolutely. So, guys, got to be careful. Take everything. It's funny. We're at a point where you have to take everything with a grain of salt, but you also have to really listen to everything, because all it takes is one high impact, one very important person to say just one wrong thing or right thing to really give us a pivotal moment.
Yeah, and I think the Trump tracker is on like a medium score today. We got a 50 score or something like that. So we have to look out for him too. Usually after major data reports, he throws his 2 cents in. If data's very bad, he's going to be looking for someone to blame, saying the Feds did a terrible job. If data's very good, he's going to take ownership and say that's thanks to me and my team.
Yep. Yeah, exactly. Guys, we did it. We're helping jobs. Oh no, the Fed did it. The jobs are bad.
Exactly.
Yeah, let's see, guys. So president speaking, in-town pool call time is 9 a.m. That usually doesn't bring the biggest of impacts. 11 a.m., president receives his intelligence briefing. I'm going to leave my jokes out of that one. And 1 p.m., we have a press briefing by White House Press Secretary Caroline Leavitt. So that could give us a little bit of a move. Because that's press secretary. She could come out and say the president is looking to do A, B, and C because jobs are doing 1, 2, and 3. So regardless, yes, she could also say a whole lot of nonsense. It's just something we want to be aware of. We're
Yeah,
investors, we're day traders. We want to be aware of not just the stocks and the futures, but the economy, the overall what's moving.
100%. One thing I love is like on the home dashboard, even if someone is still a little bit newer to fundamentals or they may be confused, right on the home dashboard, like you can click the last bullish candle on S&P 500 and it tells you exactly what happened, right? So I've never seen a platform that is this intuitive in real time and you could take advantage of information like this is insane. This is like for us veterans that have been involved in fundamentals for years now. We've never had something like this, right? So this is absolutely beautiful to see. If someone's confused, why is S&P going up as we speak right now? A quick click there generates the analysis, what happened, the technicals, the 1 minute price action, and now that confusion is turned to clarity within a simple click of a button. Like the power of AI, I don't see the AI bubble bursting anytime soon with the amount of innovations we're seeing, right?
No way, bro. No way. It's too strong, too innovative. Like you said, it's reaching more and more and more. I mean, if we have self-driving cars progressing more and more, that alone is AI.
Yeah,
Right?
exactly.
I mean,
100%.
there's so many different. It's just such a broad spectrum that AI is getting involved into everything, even
Healthcare,
pharmaceutical.
health exam. We're on the same page, bro.
Where do you say
Healthcare and
that?
pharmaceutical. I said the same thing. 100%, bro. It's gonna be in every industry. It's gonna be something that just as a human race, we're gonna need to adapt to accordingly, right? But just to go off topic a little bit, what do you think is the end result of AI? You think it's gonna be a iRobot Terminator Matrix situation?
Yo, it's gonna be like one of those. You ever see Wally as a kid, where all the big guys in the chairs?
Yeah, yeah. You think it's gonna
Everyone's
be
just
like
gonna be
that?
everyone's just gonna be fat with an iPad, and AI is gonna do everything for us. No, I'm just
Yeah.
kidding. I'd hope not. I would hope there would be some type of not a wall, but some type of barrier to say, okay, listen, AI can obviously take probably 90% of the jobs, but can we hire people to watch the AI? Can we hire people to adjust the AI? Because
Yeah.
things are always changing. AI can't really adjust by itself until it's trained.
Yeah, well, once you have that AGI where it's
Yeah.
continuing to learn and reshape and remodel itself, like it could be some dark, scary times. You could enter a dystopian future, but that's just something I've always been interested in, just theorizing. Conspiracy theories have always been a thing of mine and jump deep in those rabbit holes. You know what I mean?
Oh man, guys, Jeeve likes Black Mirror.
Yeah, yeah.
Yeah,
You've seen all the robots coming out, right? The Neo bot, I think it is, or the Tesla bot, right? Are you gonna get one?
maybe that looks pretty
Maybe,
cool.
right? They
I'll
still
have a
look pretty.
trade for me.
Yeah. Do some HFT trading for us. It'd be ripping it on the computer fast as hell.
Yeah, right.
But anyways, quick scan of the charts. It still looks like stock markets are holding that relief, even with 30 minutes into the New York Stock Exchange open. We're for sure going to see a bit of a boost on those Nvidia earnings, market shifting into cautious optimism, rate cut bets slightly increasing, and gold's a little bit choppier here. I am still going to wait on gold for the New York Stock Exchange open to see if we can sweep into the same support level, see some short-term buys before we look for any retests of better sell zones. I think for the end of the week now, gold may be stuck in a little bit of a range here. We have a tug of war between bullish and bearish fundamentals. So I
Yeah,
wouldn't be surprised seeing a little bit of a technical consolidation get created as we have a lack of one-sided clarity on gold. You know what I mean? With
yep,
the because obviously rate cut bets can still be positive for gold. The unemployment rate going up can still be positive for gold, but also having cautious optimism and a lot more demand in risky assets, that is going to decrease safe haven appeal a little bit, right? So
yeah.
I wouldn't be surprised seeing some technical consolidations created on gold, but I'd love to be bouncing in between these levels here. I think that would be a great play for us to end the week. And honestly, SPX, Dow Jones looking a lot cleaner. Stock markets are looking a lot cleaner here.
Yep. I gotta say though, gotta be a little careful with how the dollar's reacting. So the dollar reacted real bearish to NFP when it came out.
Yeah.
which obviously would lead to more bullish price action on gold.
Yeah, we are seeing a little bit of a technical double top here on the
Yeah.
dollar index on the 1 hour, right? So rate cut bets increasing slightly, unemployment rate going up, plus
Yep.
you're at this technical price area of interest where if I just drag it across here, you can see to the left here, it's a major resistance point,
Ooh,
right? Around
huge.
100.3, 100.4. For sure, we could see a little bit of dollar retracement. And then, like you said, with our intermarket correlations, could still provide a little bit of support for gold as well in these conditions.
Yeah.
So something
Yeah,
you
no, I
keep an
like
eye
that.
out
I
for
know
there.
what I was seeing was gold is sort of creating some higher lows though, and some recent higher highs ever since about the lows of September. So September we made one last final bit of a lower low. I'm gonna switch screens real quick
Yeah,
for a
you go
quick
ahead. You
one.
go ahead. Show it.
So the dollar on a quick chart. Now I don't like to use the dollar as sort of like a direct inversion to gold. Like people use the
Yeah.
ES and VIX. Like VIX has to go up while ES goes down.
It's not dollar and gold is not
Yeah,
a direct correlation like that, but it does play a little bit of weighting into it, right? Depending
exactly.
on the context of the fundamentals.
Exactly. It gives us some clarity to say, hey, listen, dollar's making some higher highs, higher lows, dollar's going bullish. We might be leaning a bit more bearish on gold right now. So
Yeah.
that was sort of what I've been seeing ever since this was the last lower low we made, and this was September 17th.
Yeah.
Since then, we sort of turned around. We took out this high right here. We even ended up taking this high out right here. And now we're close to taking that high out again with some momentum behind it on the
Yeah.
dollar. So that's a little concerning to me to be long on gold at this point. So I
Yeah,
will want to watch
especially
that.
with how aggressively gold has surged in that parabolic rally, right?
Yeah,
You have to ask yourself like how much more can it go if we don't have the same fundamental supporting factors, higher time frame. If we don't have any
exactly.
more trade war fears, we don't really see any more geopolitical risk headlines that haven't been priced in already. Rate cut speed has started to slow down and dwindle a little bit. That's why today I'm looking to see maybe we can see some short-term gold buys just with the intraday sentiment,
Yeah,
but we could still probably see that higher time frame bearish structure remaining intact, or even a higher time frame consolidation, which is very common with how gold moves on from a historical standpoint. You'll see these parabolic rallies like during the global financial crisis or like during the lockdowns, but after that information has been digested and priced in, gold could consolidate for months on end, right?
yeah.
And then everybody who is just buying every day blindly goes, shit, what's going on now, right?
Yep. So with gold, we had higher than forecast non-farm payroll, which is bullish, which would lead to a bearish reaction on gold.
Yeah.
We had the dollar reacting bearish off the gate, but it still looks stronger on a higher time frame route. Gold looks like it's almost on the daily time frame here. The way this yesterday rejected with a long upper wick, a lot of people, I don't know if you guys remember gold in the morning yesterday, but it tricked out a lot of people to the upside, right? Markets
Yeah.
rallied in the morning to like 41.28.
And then it
People were,
melted like 800 pips.
dude, it went crazy,
Yeah,
man.
we were in that. That was nice play.
Beautiful, man. Good stuff. So with that momentum I'm seeing in the New York session, and even the day prior, it sort of did the same thing where it rallied in the morning and then it sunk New York session. I want to see that same reaction. I'm a bit more lined up technical wise and with some of these fundamentals being the data on a bear end on gold. Even though, yeah, short term relief, I would like to see longs, but I'm not against taking those shorts.
Exactly. That's why I was saying, like, from a technical perspective, if we could create a little bit of a reactionary double top at that 4120s area again,
Yep.
4100s, really trap a lot of buyers short term, make it look like gold's going to surge, and then retest those better sell prices and dump off again. I'd absolutely love that, right?
Yeah, that would be a great short position,
Great
man.
play.
Anywhere above 4100 to try to hold it down, even to 4060, 4058. We're looking at I don't know how many pips that would be, or let's see. 458?
Yeah,
450?
nearing 500 pips at least,
Yeah,
which on gold is pretty realistic with the surge in volume and volatility we've seen through the entirety of this year, right? Huge moves we've been seeing.
yeah. Yeah, absolutely. This is massive, guys. This could be leading up for a real nice trade setup on gold today. Just want to be patient. Right now, where we are, and I'm sure Jeev is going to agree, this is a no trade zone.
No trade zone, pure chop, pure
Yes,
chop.
sir. Yes, sir.
You're getting aggressive wicks on both sides, pretty indecisive candle bodies. With the
Yep.
economic data, like you said, NFP was really good, but unemployment rate still ticked up, right?
Yeah.
And then even though you're seeing rate cut bets slightly increase on stocks, you have Fed officials coming out saying rate cut bets may be bad. So we are for sure going to see a little bit of chop where the majority of retail traders from New York Open to New York Stock Exchange Open, even
Yep.
London Close, will just be getting flushed out on both sides. And then, like
Yeah.
you said, once the noise and dust settles, maybe after London Close into later New York in the following daily candle, we might see that main move take place. Gold bear still be a little bit more dominant.
Right, right, exactly, exactly. So keep an eye on it. Keep an eye, especially when we're in a chop zone like this, guys. Zoom out. Don't be so zoomed in on a
Great
5 minute.
tips. Great
Like,
tip.
like you stay on a 5 minute and you're gonna think, oh wow, we just had a big sell candle. We're gonna continue, and then it chops.
And then it
Oh yeah,
chops.
right. Oh, we're coming off a VWAP right here. I want to go long, and then it drops. Like
Yeah.
it's stopping everybody out.
Yeah.
Unless we're near one of our areas of interest, because that's where our high probability is.
Yeah.
This is a no trade zone.
And the best thing you can do, like you said, is zoom out and then at your areas of interest, especially with all the things we have available to us, set an alert.
Yeah.
You know,
Yeah, dude,
once your alert gets triggered, then go back into execution mode because
yeah.
just as human beings, there's only so much intentional focus we can put in the markets. And if
Yep.
you're wasting your brain battery and intentional focus on chop, you're gonna take stupid trades. Then when you take a stupid trade, you're gonna spiral and start revenge trading. Whereas if you conserved your brain battery, waited for your area of interest to be triggered, then started expending that energy, you're going to have a higher probability of taking a winning setup.
Exactly. Exactly. Guys, great stuff today. Fantastic show. Make sure you run the like button up if you haven't yet. We have crossed 100 likes. You guys are amazing. Best Market in the Morning show so far. And it's just
Thank you
going to get
guys. I
better
really
from here.
appreciate that. I really appreciate the support. We've loved all the feedback you guys give us about market. Like you guys have to understand, which is crazy. The market team has grown so much and we haven't even been active for a full year. We started in 2025, right?
Wow.
And we're already starting to dominate the fundamental dashboard space, but not just that, the fundamental dashboard space where it's accessible for any trader. You don't have to have some economics degree or finance background to use market and understand it. That's how many tools and how many insights we've incorporated into it at a click of a button, right? Sharing the fundamental drivers, giving you live breaking news headlines. You don't understand a news headline, you click a button and it breaks down. You don't understand a market move that happened, you click the candle and it breaks it down, right? This is just unheard of.
It's next level, guys. It really is. I mean, just like Jeff said, Fed hammock cutting rates. Well, I don't know what that means. Let's say you don't know what that means. You press the brain icon, it's going to break it down for you. The headline signals caution from the Fed about premature rate cuts. It really tells you, and then it'll tell you what it's going to impact and how it's going to impact it.
Exactly.
I mean, name a better software. I'll wait. All right, guys. We're going to be wrapping up the show there. I hope you all enjoyed. Absolutely fantastic stuff from Jeev and Kev over here.
Yeah, Jeev and Kev, I love that.
Right? Cool, man. Cool. Market in the Morning. It's coming every Tuesday and Thursday, guys. So make sure you stick around because we're not going anywhere.
If you want this consistent value, make sure you tell all your trader friends as well. Say, hey, I know you guys watch these other live streams, but they're not breaking down the markets like they do on this show.
Yeah.
Right?
Yep, absolutely.
But I want to thank you for having me on again, Kevin. I really appreciate it. You're always great at communicating and sharing value to the audience, and I really admire that about you.
Hey, thank you, bro. Likewise, man. Absolutely likewise. Killed it.
So we're going to be ending here, right? I'm going to get out of here as well.